How you doing?
How's it, mommy? Like, can you?
I can't complain. Nice and early this morning for our episode of How Would You Build It?
Yeah,
Yeah. So yeah, we're going to touch on maybe a past kind of buzzword. We like buzzwords again. But I think to kind of set the scene, I mean, we're recording just after the South African Reserve Bank just raised interest rates, and the whole country, everyone's going, "Whoa, don't want 0.5%." I don't think many people saw it coming, and it's really going to hurt people's pockets and their investment spending behaviors.
yeah, yeah, definitely. I think there was a lot of talk about an interest rate hike, but a 0.25% hike, not a 0.5% hike. So definitely a bit of a shock. And if you or one of the things that's quite complicated in South Africa is the Reserve Bank's mandate, doesn't include economic growth. So they look at interest rate and protecting the value of the rand and
Mm,
make adjustments accordingly. But at the
mm,
moment, our economy is under strain because of Eskom.
mm,
And load shedding, as well as some international pressure.
mm.
And then, so we've got negative growth and we've got a rising interest rate. It's kind of like the opposite of what you think should happen. If there's
Yeah,
negative growth, you'd want to see the interest rate go down in order for people to get money back into the system. But
yeah,
anyhow, it is what it is.
yeah,
But yeah, definitely a shake-up happening in the financial world. I mean, we've
yeah.
we've touched on the banks before and all of that. But whenever there's such a big turn in events, it creates opportunity for new things
Mm.
to finally get their day in the sun. And I think that's what we're going to talk about.
Yeah. Exactly. So why I brought it up is because we're gonna go down the crypto route today, and the idea was there was crypto fever, and for people that have been following crypto for a long time, you'd understand that there is this 4-year cycle because it links with the Bitcoin halving, and things get built, and then the speculation drops, the bubble bursts,
Yeah.
and then things go quiet. And in that time, we kind of talk in the crypto space about it's the time to build. It's the time to build new things. While it's quiet, there's less eyeballs. And then when the attention starts coming up, you kind of ride the wave. As the kind of Bitcoin price goes up and all the kind of sentiment moves back, all the attention moves back, you're kind of at the front of the race. With your new product to market with this new technology, because if we think about crypto, it's generally it's a technology. It's a tool you can use for a startup, but where it struggles is that they've pegged it to a financial instrument. And I think you've even touched on this in the podcast before. And yeah, so everyone kind of associates blockchain or crypto with that financial element, but there's that underlying technology, the blockchain technology, that's actually key here. But I think there's just too much association to those boom and bust cycles and people losing money, and kind of gets that sentiment of, oh, I don't know if I want to get involved. So, if I look at an as is analysis of the crypto blockchain space, I would say that that's probably one of the biggest kind of struggles that they've got at the moment. What are your thoughts?
Yeah, I think that's definitely the case. And I think there might be a case of saying, the more traditional players are enjoying the fact that it seems a bit like speculative and high risk and very volatile. I just saw the paper or snippets from the paper that came out in the US. It's a 37-page document. I didn't read it. I read the highlights in a crypto newsletter. But they highlighted how they speak about the volatility of these things and how it isn't backed by anything. And the speak really is like everybody should be scared of us, right? That's what governments speak about. And I think at the back of that, there might be a rationale as to why they are worried. And it isn't necessarily a control thing. It's more a system design thing. So you think about like how our entire financial system works, and I'm not an economist, but one can just think about all these different parts that make a free market economy work. And we've got the stock market in there, where younger people work, and the dividends that go back from the stock markets really look after the retirement of the older people. So we've got that.
Yeah.
The stock market is also a place that absorbs the oversupply of money. So if there's too much money in the economy, a lot of the money flows to the stock market,
With the
which
standard.
then finances the growth and expansion of these large companies, which
Mm-hmm.
in turn then pays out dividends to increases the salaries of the employees, which then goes back into the economy.
Mm.
So it's all circular design thing that's set up
Mm.
to work in that way. So, all of that works well. Economies have been growing for mostly growing for, a number of years. And now all of a sudden we have this new product where we're going, well, if there's an oversupply of money, instead of buying stocks, people are now buying crypto, right? And that crypto, fine, you can do with your money what you want. But the problem is that doesn't now help a big corporate grow and become bigger to, one, look after retirement, and to, pump money back into the system through salaries and bonuses that would end up creating more taxable events. So I can imagine a government looking at that and going, well, this is going to become a problem because this whole design of the system to make money flow and create taxable events now all of a sudden doesn't work that way, right? So it's been clear American government's been looking at this, trying to figure out, okay, well, how do we introduce this technology, which definitely has a benefit in the future, without breaking our entire system, right? And I think they're starting to figure it out because they've been starting to clamp down heavily on any kind of crypto, anything in America. I think anybody that's been building a DeFi protocol with American customers the last 2 years, if it was not successful, you'll probably be thankful now because you're probably not going to get served. I'm not talking about successful in terms of making money and then going to zero. Like, if it never took off, it's probably a good thing. Because
you don't have eyeballs on you.
Nobody's noticing, or nobody has too big a grievance. We saw Duquan from Luna getting arrested a few weeks ago. I mean, that's not going to go down well. I think it's Singapore and South Korea and America has warrants of arrest out for him. So they say he might be doing a world tour of visiting prisons everywhere. So that's a big one. But I mean, there's many of those to come. And I think the reason they're cracking down is they really want to roll out a structured way of how this technology can be rolled out without breaking the system. Now, whether or not people agree with this sentiment, they think it's a good idea or not, I mean, I'm not pushing any particular agenda here. It's just an observation of what I think is holding back American government to just go, cool, crypto's fine, let's go. So another interesting thing is, which we covered in the newsletter, is the NASDAQ's getting ready to roll out crypto custody. Now, a lot of people are scoffing at it, going, well, I don't need the NASDAQ to keep my crypto custody. But it does mean they're probably moving to a space of moving, stock trading on-chain, which would reduce friction. It would create really cool things, such as maybe an alternative to an order book where we can do like a decentralized exchange of trading stock, which could be really interesting. And then allowing all of these innovative DeFi products, but in a stock market space. So imagine if you have tokenized stock of Apple, and you're not, or Tesla, and you're not planning on selling it, and now in the smart contract you can lock it and raise liquidity against it. Wow, now that would be pretty cool. You don't have this volatility risk. Well, not at least to the extremes we can sometimes have in crypto. So your chances of getting liquidated, it's going to be less. But it could be a nice way to generate cash flow and invest more in those companies without having to put so much money down.
That's interesting because when you talk about that, I think of just because of the theme of the show that we have, how would you build it? I think of the Cape Town Stock Exchange. All right, I mean, they made a big shout, when they moved from Joburg to Cape Town, and they were gonna support the local Silicon Cape kind of companies,
or raise money for all the startups.
Correct, exactly. So I kind of think, well, maybe that's how they can differentiate themselves from other stock exchanges, by kind of taking on that kind of approach, as you just mentioned, as the NASDAQ.
Well, absolutely. Because if you think about it, like the original intention of the stock market was going, okay, well, we've kind of asked everybody who we know to raise money, but we're not getting the valuations we want. We want to raise more money. Firstly. Secondly, we want to provide liquidity for those who have stock. Because life happens, right? So you don't want to be tied up in a private company. You can't, raise money, even borrow money against your stock. So it was really invented for a lot of different reasons, but those are two of the core reasons why it succeeded over all these years, right? But now if you think about it, if ICO season showed us anything, it's like, this is the future of fundraising. Like, I mean, people raise billions of dollars on a few pages of a white paper and some hype. So if you put proper companies behind it, imagine like a proper Cape Town startup, and you go, cool, we want to raise money for this. But we do it distributed way. It's not having to go through paperwork and register and all of those things. I mean, we need legislation around it, but I mean, you can automate and put all of that on the blockchain. So I think there's a massive opportunity for someone to build something within a regulated framework that would allow the raising of funds for startups in a distributed way.
Yeah. And I think you touch on such a good point there. That's another thing why people are scared now after being burnt once or twice or whatever your situation is the lack of regulation around it. And so I think it was late last year, the South African government, they did kind of put some sort of regulation in place, kind of, I think, giving a blanket approach of, how are we going to regulate this thing? And it's probably the wrong way to go about it. But the problem is that there's no regulation. And people are nervous about that, right? If you just think about like the Startup Act, already the red tape that's within South Africa is hectic. I mean, I saw that that cheat sheet from Hubert from Offizen, and one, I think it was Hubert from Offizen, the cheat
Philip,
sheets. Yeah, Philip, yeah. And he's one of the points that he was like, get your business registered in Delaware. And then it's like everything is against you here in regulation. If you want to start a startup, if you want to go into the crypto space, it's just uncharted territory, and it doesn't give confidence to someone that says, but I want to use this technology to start this start this business or whatever it is.
Yeah. And look, that's a big thing, and a lot of people advocate. That's why they're advocating for the Startup Act, to say, we understand some of the challenges around exchange control and why, as a country, some of those things have been implemented. I don't necessarily always have to agree that's the best approach, but it is what it is at this stage. But the Startup Act's really trying to campaign to say, well, how do we get around that? How do we at least make a provision for people that are in a specific sector that could attract a lot of investment to be able to do so without all of this red tape and all of these issues. So, and it is quite sad. I mean, I was listening to a panel discussion there's an Africa Arena event happening in Joburg, and there was a panel discussion with some investors, and some of them also said it's like they wouldn't even touch a startup if they're not incorporated outside of South Africa. And that's quite sad, right? Because now all of a sudden we're saying, cool, so the future unicorns of South Africa will not be actually South African companies, even though they'll sit and work in South Africa and use the infrastructure of South Africa, but they can't be incorporated here.
Yeah,
so that a lot of that could also change in the next few years. I mean, there's a lot of speculation around changing of world order and world power in terms of economic power. Interestingly, this week I saw a graph that the BRICS nations surpassed the G7 in GDP.
I saw that.
So that's quite fascinating, because it's obviously the first time that's happened. And if you look at the graph, you can just see the decline of the G7 nations and their GDP, and that's most of the Western nations, and how the rise of the BRICS nations, now it's gone past each other. And to fast track that 5-10 years from now, we might be trading oil and gold and other currencies than the dollar, and then the whole investment outlook might completely change. Like, we might attract a lot of investment from BRICS nations.
It's already happening. There was an agreement between Brazil and China that they were going to start trading in their own currencies. No more dollars. I mean, it's already starting, and we've been kind of like, for the people that have been paying attention. So indirectly, when you look at crypto, you kind of look at the macroeconomics of the world, and you pay attention to these kind of things. And there's been talk of this for a long time, and now it's actually happening, which is super interesting. There we go. 2 BRICS nations saying, "Cool. Why do we need the dollar? I'll use your currency if you use mine."
Yeah.
Yes, let's shake on it.
And the fascinating thing, bringing it back to crypto, I mean, most of the cryptos are priced in dollar, right? So I mean, there might be some shift sometime where they go, cool, we're pricing Bitcoin now in a different currency. So, I still think, the gold used to be priced in rand. We need to bring Bitcoin back and price it in rand.
512,000 at the moment.
So, but all of those things are coming up, and it's busy happening, and so a lot of interesting things, which kind of leans to what I said earlier. Is like, okay, there's been a roll of the dice a bit. There's banks collapsing globally. There's a change in world order. There's financial systems are under pressure. So all of a sudden we're going, cool, there might be a reset coming. what kind of things should we be building? So we spoke about like tokenization of stock and how that could be interesting. I think using smart contracts in financial systems
Yeah,
is a great way to empower the
completely.
lower and middle class to get access to facilities and other products which they've never had access to.
Yeah.
I mean, if you think about it in South Africa, if you try and get an unsecured loan, I mean, you pay 28% interest per year. I mean, that is ridiculous.
That is insane.
So someone borrowing 100,000 rand, because of something they might want to do, or maybe they want to buy something or do something, paying 28% per annum on that is crazy. Now, I also understand on the risk side of it, on the other side, that's the price it goes for. But if we can get these people to buy a bit of shares and raise liquidity against the shares, perhaps they can borrow at 7 or 8%. And okay, at the moment the current repo rate, maybe they can borrow at 11.5%.
Not right now,
28. But 11.5% compared to 28% is an enormous difference, right?
Yeah.
So that's really going to enable the middle class to buy more assets, because I think a lot of them are not acquiring assets because of the lack of liquidity, or the shortage of liquidity it creates. But if we have these facilities that run on smart contracts and allow people to borrow money against their assets, I think there's some interesting use cases there.
I agree. I think we talk, you talk about programmable money, right? So actually programming money to have a certain function. And I think that is an opportunity all on its own. I feel like in South Africa, that's going to be the reason they don't want to do it, because they like the fact that money's not traceable and they can corrupt. I don't know. There's this, I don't know if you've seen the Gold Mafia documentary in Al Jazeera that's starting to cause a lot of waves. Have you not seen it? Oh man.
No, I've heard about it. The Zimbabwe gold stuff.
Dude, second episode came out yesterday. It's riddled with South Africa. So it's not just Zimbabwe. Yeah. I watched half mafia before going to bed last night, and I was like, oh, here we go. South Africa's in the limelight in the wrong place again. Anyways, but I wanted to kind of move the conversation to, obviously we talk about founders and startups and things like that on the show. How would you build it? I actually wanted to say, like, what are the success stories that we have in South Africa, right? So, crypto has had its boom and busts, but out of those booms, we've had companies like Luno with a lot of speculation at the moment that their new CEO that's coming to play, I think this week, is planning to take them public, so putting them as a listing. You've got the likes of Valar, Revix, and then there's a company called Crypto Convert who are behind, and I've had him on my other podcast, Carl van Beek, who was behind getting Bitcoin in Pick and Pay, being able to pay for it on the Lightning Network. So there's these cool stories in the back. Obviously, Luno is probably the most known and understood thing, but they're just an exchange where you've got Revix, that is a more investment platform where you can buy thematics, where it's like you buy a theme of assets within it, which I think is awesome. And Valor, another trading, and then obviously this Lightning Network where it becomes a use case. So what's your view on those kind of success stories and how they became those?
Yeah, I think there's a lot of people that are doing a lot of cool things, right? And we can go back to ICO season. There was a South African guy, developer called Andre Cronje, who, started playing in the space, reviewing some ICOs, reviewing the smart contracts, and eventually started trading a bit himself, and then, writing bots for himself to trade. And then he built the first version of Yearn Finance. Now, Yearn Finance is quite a big DeFi protocol. And consequently, Andre was involved in quite a lot of different projects. And I think he's back at Phantom now leading. Phantom is another blockchain, and he's leading some of the development and strategy efforts for them. But he was involved quite early. So not really startup in the sense of building one company, but really playing a key role in building out that industry and pioneering it. Another interesting startup in this space is also South African guys, Voltavo. I don't know if you've heard about Voltavo, Bobby, but they've got a credit card that has a fingerprint scanner on it, which does crypto custody for you. But it's a card that you can actually swipe at places. So
yes, I know about the card. I didn't know the name. So yeah, that's really cool.
So they've kind of have a pilot running, and they've got a few things. So that's pretty cool. And for those people that don't really understand why that's a big deal, custody in crypto is obviously a massive thing, right? And one of the unique things about crypto compared to your bank account is you can actually hold your own assets entirely without
Exactly.
anybody having any access to it. But
Exactly.
the downside of that is if you lose your access to it, you can't phone the call center, right? So Voltava, what they do is they kind of seed the wallet with your fingerprint. So if you lose your login details or your seed phrase, you can seed it from your fingerprint, and then you can cover your funds. There was another interesting startup that tried to address this called WorldCoin. Have you heard of WorldCoin, Bobby?
Yes, I've heard of WorldCoin, but I can't. I don't
Yeah,
know what
so
it.
Sam Altman, who's actually now CEO of OpenAI,
Yeah.
his previous startup was one called WorldCoin, and what they would do is they'll build these retina scanners,
Okay.
and use that as your to seed your private key. And so the idea really was, it's like, every point of sale on Earth would have one of these scanners, and then they put a token behind it called the WorldCoin token, I believe. But that would then become a means of transacting in a retail environment by using your retina scan as a private key, seed for a private key.
Yeah.
So really a lot of cool stuff happening in the custody space. But yeah, Voltava, South African, they're not incorporated in South African, but a bunch of South African guys, they're doing pretty cool stuff. So I think, there's there was another one that was quite interesting. They're doing, what is it called? Anyway, some guys doing futures trading in Cape Town, a futures platform on the Polygon network. They raise some money doing cool stuff. Moment, obviously, we've spoken about Moment before. So I think a lot of creative people doing a lot of creative things. I think it would be interesting to see how these things unfold as regulation gets rolled out.
Yeah.
I don't think we're too far away from banks adopting some of this technology, and we've got Standard Bank doing quite a lot of work in the space, and I believe all the other banks are as well. So it's a matter of time before we'll see some of these things hitting mainstream and becoming more used on a day-to-day basis. But the question I have, Bobby, for you is: do you think we actually need to replace cash? And not only cash, but like, if I go to a shop now and I pay with Apple Pay or Google Pay for that matter, it's quite a seamless process. Like, do you think there's anything we can do to improve that? Do we need to replace that part of the financial ecosystem,
I
or
think
are
that
we talking only about stuff in the bag?
Yeah, I think if you speak from a South African perspective, I think that trajectory that you're talking about is on par. I mean, it makes absolute sense. I've stopped carrying a wallet around. Literally,
Yeah.
I mean, the problem is you lose your phone, you lose, again, it's like you lose your cold wallet or whatever it is, you lose your
Yeah.
assets, you lose that. So there is that danger. And I guess a retina scan or a fingerprint scan that you can pay, I mean, it makes sense that we're going to go in that direction. So I'm happy with the trajectory. I think the problem is more, we've spoken about this on the podcast before. I think the biggest problem is that the majority of South Africans, or the market that we want to address, are still so cash dependent. They still go, like, literally, they'll get their money, they'll go to the ATM, they'll withdraw it all. How do you change that behavior? I think that is the hardest thing. I think we spoke about with PayShop. I think that's the problem, right? So it's more about how do we get people to change that behavior, and I think that's going to always be a stumbling block. So I think if you're a startup in South Africa that's looking into the space, you'd have to look outside of this border, and that's what Luna did really well, right? So Luna went and went to Singapore, London, and all of that. They got out of the country. And I think you'd have to take that approach. But yes, I don't think there is a need for cash anymore. The downside of that, though, is for those people that follow crypto, is the CBDCs, which is a central bank digital currency, where it is cashless. It's all digital. And there's already a Chinese version of this. Again, pros and cons. One of the cons that everyone talks about is the fact that everything is traceable. Everything is traceable. It's like every single transaction that you make, the government can watch and they can score you on that. Then they say, why are you buying alcohol? Why are you doing X, Y, and Z, that you're gambling or whatever it is? Why are you spending your money on that? Therefore, we're going to give you less money or something like that. Whatever they end up doing with that, and that becomes a bit scary. But if you take the other side of that, where you've got a country that's super corrupt, like, I don't know, maybe South Africa, being able to trace where the money is flowing, awesome, right? I'm for that. Like, please, let's do that. Like, if you're going to give us 200 billion rand to, you know, go green, then let's watch where you spend that money. If you're going to build a new power plant, let's see how that money gets spent. And I like that approach. So pros and cons, it's one of those depends, but as a user, as a person on the ground, as a consumer, I love the trajectory. I looked at people using Apple Pay, like you said, and I was like, snob. No, I'm like, pew, pew, pew. I love it.
Yeah. No, I think, and that's quite interesting because, I mean, there's all this AI talk and crypto talk, and Apple is kind of quietly building stuff,
Something.
right? And you know, what's really interesting is I saw they in the States, they're launching Apple Pay later, which is a completely interest-free loan that you can use Apple Pay to buy stuff and pay it off over time without interest, right?
Sure.
So they've obviously, every time I go to the shop, they kind of picked up like my spending behavior, and they see how I use my phone and what websites I go to, and based on that, they can build a credit profile, right?
Sure.
And now they can offer that service at retail and obviously make a bit of a margin on that, because it's a purchase I wouldn't have done if I didn't have that service. So they'll probably make a margin. And to me, on the front end, they're offering that as a service. And I find it fascinating, you know, because the way they do this is, it just makes it so easy and seamless. And it's kind of like no one's really paying attention, but they're busy building a bank here. Next thing, they're going to allow crypto to pay through that, and all kinds of interesting things.
They've been very quiet on this front. So
yeah, so I think there's something brewing on the Apple side, and it's definitely happening. To your point of the CBDCs and the you know, government checking where money flows, etc. I was in a very interesting conversation with a very senior economist at the central bank, and we were speaking about like how this free market doesn't want to control the micro, right? Free market says we look at the macro. So basically, in layman's terms, they don't want to control or have an influence on the day-to-day transacting between you and me, or you and a business. They don't actually. It's better for them to not have the detailed view of what's happening there, to rather focus on the macro picture and influence the macro picture, right? Where China does it the other way around. They focus on trying to manipulate the micro in order to change the macro.
That's interesting.
Right. So it's two completely different philosophies. And I think what the West is trying to figure out, or at least most countries that, you know, have free markets, are trying to figure out, is saying, okay, how do we bring about the positive part of digital money and our ability to do certain things with it, without letting this become a power grab for someone to say, well, now we can influence the micro. Right. So one of the reasons why we haven't seen these things move is because there's a concern, you know, about people with very good intentions to go, well, is it a good thing for a government to be able to see where every single transaction is happening and all of this stuff's going down, right? Because, you know, in the short term, you might go, yeah, that's cool, we can figure out corruption. Long term, this kind of power, I'm not sure. It raises some red flags. So, you know, I think the answer is really a middle ground. So, you know, there's an opportunity for someone now figure out what that middle ground looks like, and go, cool. Well, how do we bring forth the power and the ability of distributed ledger technology to our financial systems without bringing about the power of someone to have micro control over, you know, what are you allowed to buy and whatnot, based on us being able to switch it on and off. That's pretty scary. I mean, I don't know how true it is, but we see these media reports about someone jaywalked and then they go, cool, you can't spend money for the next 2 days. I'm like, cheapers.
Imagine. Wow.
Yeah, imagine in South Africa. I think there's no person in South Africa that's never not jaywalked. So
I'm about to go jaywalk right now.
I was in Europe once and I did it. I got frowned. People are like, "What are you doing?" You know, I'm like, "Oh, that's what we do."
Yeah, you've got to Vietnam.
So it's one of those benefits, I guess, in you know, living in South Africa. There's a lot of flexibility around these things. But you know, how's that going to change when we bring about micro, you know, measurement and control over what happens and who spends money where? There's a side of me that feels like it's not a good thing.
Yeah, I agree. It's kind of like, I like the idea, but I'm more leaning towards that. I'm a bit uncomfortable about what would happen with that power. So yeah, I agree with you. So let's just quickly dive into, I mean, we talk crypto, we talk blockchain. There's different versions of this technology. So there was a stage where you couldn't turn your face in any direction without hearing the term NFT, right?
Yes.
And that is a non-fungible token for the people that don't understand what an NFT is. So non-fungible meaning it's something you can't just swap. I will never own Rainier's phone. He can't own mine. Like there's one, it might be an Apple, but there's only one version of his phone that has his apps on it, that has his, password on it and XYZ. Okay. So non-fungible token. So yeah, there's NFTs. Then there was the decentralized autonomous organization, which is a DAO,
Yes.
where people can vote anonymously.
Did any DAO ever succeed in anything?
No, but I mean, there you got people like Rob Hertzhoff, who tried with Moment to build this new South African DAO, right? Let's change the way we decide on things, right? Because a decentralized autonomous organization means that it is autonomous, and things get decided on by the organization, right? So it's not a government, it's kind of a community, which is an interesting philosophy. And it's interesting, that's the key here, right? This is what that ledger, that kind of the underlying technology is allowing us to do, right? So anyways, with no more jargon and buzzwords, like what kind of technology or what kind of use case do you feel what's leading the way for something to be built on in South Africa or I guess global? What, any of those kind of NFTs, whatever?
Yeah, so I think one of the stuff that I saw being involved in some DAOs is it's almost as if everybody looks at each other and goes, okay, who's going to do the work, right? Because there's this and
that's
and
hilarious,
it's,
actually.
but it's actually kind of like it's one of the, I would say, weaknesses of a democracy as well. It's like, it kind of creates the sense that, okay, there's no single point of accountability. It's more a political party or a movement or a group of people. Whereas in a bureaucracy, or not a bureaucracy, in a what do you call it? Like a dictatorship, autonomous government. You have one person taking accountability and saying, I'll make this work, and if it doesn't work, you can throw me out and get someone else, right? And if you think about it, to a large extent, listed companies work like that in a certain way, right? They've got a board, and these structures are great, by the way. They've got a board and they hire a CEO, and the CEO is the fall guy, really, and he needs to make it work. So he needs to take ownership and responsibility. Now, imagine a large company, let's call it Old Mutual, needs to run in a DAO fashion, where every single major thing that needs to happen gets passed to a vote of the 25,000 employees and shareholders and the like, to go, okay,
Can you imagine the
no decision will ever be made. Well, that's the first thing. No decision will get made. Secondly, it will err on the conservative side, right? Because no one will boldly go out and go, you know what, I'm going to try something new and I'll take responsibility for it. And if it doesn't work, I'll fall on my sword and that's fine, right? And we need that for stuff to move forward. So DAOs kind of lack that element of ownership and authority that really makes things move forward and innovate and pioneer. So I believe some people have iterated on the original DAO structure and kind of made it more, address that function, which I think is key. If we figure that out and you go, cool, the DAO is kind of like an AGM for a shareholder meeting. And in there's some votes that gets passed, but then people get the authority and the finances and the designation to go and make something big. I think there's something interesting there. In terms of NFTs, I think we can all agree that 99% of the cat NFTs and images and all of these things have failed, and we won't see them coming back, really. But I do believe, obviously, in gaming, there's massive scope for NFTs. Definitely. Specifically, collectibles in games, gun skins and those things have become mainstream. Just the overreaction of Steam blocking people doing that was testimony to the fact that they know that this is going to be the future of gaming. So I think NFT is massive in the gaming space. But then something I'm very excited about, which we touched on earlier, is tokenization of real world assets, right? So can I finally get my title deed of my house in an NFT format? Because that offers a lot of different interesting things for me. Can I get the title, the vehicle papers of my car in an NFT format? Because now I can do other things with that. So I think
Fractionalization.
that is really key. Tokenization, and all of those things will be NFTs, right? So the
Mm,
title deed of my house is an NFT.
mm,
Once again, I was at a talk once a few years ago, and Michael Jordan made a statement. He said like 50% of everybody that studies law at university, does property transfers, right? So, and if you've ever bought a property and had to pay that grudge fee, no offense to any lawyers listening, but that grudge fee of transfer, which looks like a template that just got your name filled on, you'll realize that there's a lot of inefficiency for a lot of money getting spent in that process. So if you move that over to a digital tokenized kind of world, and all of this happens online, there's going to be a lot of lawyers pivoting into some other kind of industry.
but
So I think there's a bit of entrenchment there that's preventing change.
I'm just going to throw, another buzzword back. Replace lawyers with AI, bringing the the tokenization NFT of
Oh
your
wow,
deeds, put
lawyers
those
are
two
not in for a
together.
good time.
They're in trouble.
So,
But what is your,
so
just to finish off, what do you think the future looks like for a Luno, a Revex, a Moment, a Valar, and the like?
Oh, so I think the legislation that came out, which you mentioned earlier, recently, kind of paves the way for a new kind of banking license. It's almost saying, okay, cool, you can't just sell crypto assets now. There's some stuff you need to do. Okay, but the evolution of that could look like one step closer to what a banking license would look like, right? Because ultimately, I think there's going to be a convergence. On ramp, crypto on ramp. As it is at the moment, when all of these technologies get adopted by mainstream banks, they all technically going to be on ramps, right? So, how that plays out, we're not sure yet, but one could argue that, just in your internet banking, you can swap your rands into Ethereum, and from there bridge out into a wallet if you wanted to, right? So if they start offering those things, you have to look at a Luno and a Valor and these guys and go, well, okay, well, what are they going to do, right? And I think the answer is they're going to become full stream banks, like they're going to become international banks, or that is what they're going to be forced to do. Because if they can't compete with your bank and the convenience of simply swapping your rands into a crypto and moving it off chain or on chain from there, they're going to have to offer other things. So I think for them, it's definitely going to result in them becoming banks, which is interesting because we've been having telcos becoming banks,
Insurance companies becoming banks,
insurance companies becoming banks. Now we're going to have
crypto exchanges.
crypto exchanges becoming banks, and it makes sense because the banks make a lot of money. So
Yeah.
I think a lot of people want to get in on that action, and it's all converging to that point. So
last question, fireside. If you were a founder, what would you pay more attention to, crypto or AI? Go.
No, I think at the moment, massive opportunities in crypto because it's so quiet. It's really the build phase. And at some point, after regulation becomes mainstream, the opportunities will be everywhere. And you are building right now. I think you're in for a good time 2 to 3 years from now.
And right there, we'll call it, guys. Thanks very much for watching, Rania. Thanks very much for your chat. Always look forward to it, and we'll see you in the next one.